Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert over here, and you know you're on with Big Al. We are the Dividend Diplomats, and we can't wait to talk to you about 3 high dividend yield ETFs.
Before we get into it though, smash that subscribe button. Give us that thumbs up. Help us get to 10,000 subscribers. We're getting closer. We just crossed 8. Thank you everybody for your support. And we also want to let you know, we have been reading and listening to your comments. One of the big things that continues to come up as Lanny talks about his Vanguard strategy is what about the other dividend ETFs?
What about them?
Yeah, we want to learn about more. There has to be more than VYM out there, right?
Yeah. You know I've been buying VYM every week, both my wife and I, ever since July of 2020.
3 shares every week.
3 shares every week, so 6 shares total each week. And everybody in the comments are leaving other ETFs. Well, what about these other high dividend yield ETFs versus just VYM? These ones I think are better. This one's better. No, that one's better. No, this one's taller. This one's smaller. Well, guess what? It's time to put them in the ring and have them face off to see which one is actually the best high dividend ETF to buy.
Yeah, who's better, Hogan, Rock, or Stone Cold? We could talk individually all day, but let's just put them in the ring, have them face off, and see which one comes out holding up the belt.
Blue Meanie, Hacksaw Jim Duggan, and the Bushwhacker. Which one's better?
Yeah, hey, never know, right?
And by the way, you got the Brothers of Destruction. We're back, baby.
Yeah, I'm actually touching Lanny. We're not in a Zoom video. But this is awesome.
Again, brother. No, we'll see what's going on here. We can't wait. Again, we're actually going to talk to you about 3 high dividend yield ETFs again. First one's going to be Vanguard's VYM, the one that is in my portfolio. Then we're going to put in Invesco's high dividend yield ETF, ticker symbol SPHD. That's one that you've been leaving in the comments, as well as State Street's Global Advisors ETF, high dividend yield ETF, ticker symbol SPYD. And Bert, give us a little bit of background about the ETF itself.
Yeah, that's where I was about to go anyway, Lanny. This is perfect. So why some people prefer ETFs versus individual stocks? They are gathering a bucket of stocks, what you would call it. Each one of these exchange-traded funds, or ETFs, is held by these funds, and they buy and take care of the diversification for you. So they just don't own 1 stock. They just don't own 2 stock. They can own 30, 50, 100. Some of them can,
1,000.
Yeah, 1,000, 500. They can be done to achieve a specific investment purpose. So as dividend investors, we're today focusing on dividend-focused ETFs. So those fund managers that are buying dividend stocks and replicating our investment strategy.
And to give a little bit of background about 3 investment management firms that we're putting in here, Vanguard. You know, we all know about Vanguard. They're one of the longest, oldest, and biggest asset management firms in the world. They currently actually have over $7 trillion in total assets that they manage.
That's a lot of money, isn't it?
Bert, what about Invesco? I know you know a little bit of details about Invesco.
I do. They don't quite have the $7.1 trillion that Vanguard has, but they still have a lot of money under their portfolios. They have over $1.5 trillion asset under management, and their asset under management per fund is a nice $3.1 billion too. So each fund has a lot of cash in it too.
Yeah, actually, and then when you talk about State Street Global Advisors, asset management firm, they manage actually $3.5 trillion. So you double that and you got Vanguard. And to go backwards to Vanguard's VYM, there's actually $45 billion in that fund alone. And as Bert says, Invesco has $3 billion in that fund. And then State Street has about $3.6 billion within their high dividend yield ETF.
So we're not talking small mom and pop shops here. We're not talking 2 people sitting in one of the diplomats' living rooms.
We're talking the Colossus of Cloud, Bert.
The Sultan of SWAT?
Yeah, the Great Bambino or the Great Dividendino.
Yeah, so these companies will leverage their expertise and their research to help try and find any advantage they can to build these great funds. So that's why a lot of people focus on ETFs versus the individual investing route. We do both. We like investing in ETFs. Clearly, Lanny does with that big VYM.
It takes the emotion and thinking out of the equation. It reduces your risk in a way because you're not focused on buying 1 stock, 2 stocks. You got a basket full. But Bert, let's see here. The viewers want to see us go into each ETF and then in the end find out which is the better high dividend yield ETF to buy right now. Let's start with Vanguard. VYM.
Perfect. Run through the metrics.
All right, so the metrics, these metrics are going to be as of, May actually 13, Thursday, even though we're recording this on a Saturday. So VYM, they're trading at a little over $106 per share based on a forward earning projection, within this ETF of $5.14. The price to earnings ratio is actually over 20. It's at 20.65, Bert. But how does that compare right now?
Well, if you think about it, we're talking about investing in stocks, I think the market's a fantastic benchmark here because you have a lot of stocks. So you want to see how does this basket of stocks, of dividend stocks, compare to the broader market? What do we know about the market? It is expensive. It continues to climb. PE ratio for the market, it even touched 45, I saw. It might be a little lower, but it is well above 40, which are just insane levels.
Well above. And, going forward, I know it's still in the into the upper 20s as well.
So this basket of stocks at Vanguard is trading at half the PE ratio of the market. That to me is the big takeaway from this right here.
The trailing 12-month dividend right now is about $3 per share for VYM. When you do the math with that, current forward EPS, that leads to a payout ratio in that sweet spot, perfect payout ratio.
That's what it is. That's what you want to see, a perfect payout ratio.
58% right there.
Yeah, 40 to 60% is what we consider perfect because that is the balance between paying out shareholders and reinvesting in the company. So it's great to see the fund at that too.
Now, the reason why they're called high dividend yield funds is because they're higher than the overall market. So the S&P yield's around 1.5% right now, give or take 10 basis points, which is 0.1 in either direction. So, you're focused on that, but you also, this ETF is going to be higher than that, but you also want dividend growth. As a dividend investor, as our third dividend metric in the stock screener, Bert, what is VYM's dividend growth rate on the 5-year average?
Yeah, it's 7.18%. Which is fantastic when you add up all those dividends from the last year. But what's notable about VYM is they had that massive, 18 to 19% dividend increase this year.
They crushed it in Q1 for sure.
Yeah, compared to Q1 last year. So the dividend growth is back in there, and that's what we want to see in here. We don't want to just see a stagnant dividend, not at all. We want to see growth in these funds to make sure that you're getting that safe and growing dividend.
Yeah. And, again, comes down to the yield. Why do they call it a high dividend yield? Well, based on the share price and that forward dividend of $3 right now, the dividend yield is only 2.82%. I say only because when I started buying VYM, it was around 3.5%, and man, with that appreciation, it has pushed the yield down.
Yeah, that's great though. That's still well above the market.
Yeah,
that's
well above the market.
Yeah, well you said that's what you want to see in a high dividend yield fund.
Now, before we jump into the other two ETFs, you want to give a quick little highlight, B, on the expense ratio, the holdings, and maybe the top 5?
Sure. Expense ratio is key because that's what the fund will charge you to manage it. And this is a key difference between an ETF and a mutual fund. That's why people are moving to ETFs. That's why it's moving in this direction, away from mutual funds into ETFs. ETFs are known for their low expense ratio, so it does not cost as much to manage. It's not quite as actively managed as some of these mutual funds. So you're not charged that high percentage of your funds, and that's what's key here.
Saving you dollars.
And you're going to love the expense ratio for VYM. It is 0.06%.
Wow, very low. They currently in that ETF, they hold 416 different stocks. But what are those top 5 holdings?
Yeah, it's JP Morgan, Johnson & Johnson, my favorite, clearly, Procter & Gamble, Home Depot, and Bank of America. So there's 5 quality dividend growth stocks right there, too. They're investing in quality. That's what we like to see, and that's why Lanny keeps purchasing VYM.
You look at them, yeah, they're not the 9-10% yielders. They're the consistently growing dividend growth companies. And actually, 2 of them are in our top 5 foundation stocks for your portfolio with PG and J&J. And again, we actually put those 2 head-to-head in a video, Bert.
Yes, we did, and we figured out that Johnson & Johnson's the undervalued one, but hey.
That's what he's buying every week.
Yeah, both are still great companies, and it's nice to see that they're in the top 5 holdings of VYM.
So give us a little bit of background about Invesco's high dividend yield ETF, SPHD.
Yeah, so let's jump right into some of these metrics here.
Jump in, dive in, swim in.
Yeah, price is $45.28. That earnings EPS projection that Lanny pulled together was $3.24. PE ratio of 13.97, so much lower than VIM. Let's see how the other metrics are before we draw a conclusion. Their trailing 12-month dividend is $1.77. Divide that by the 324. Payout ratio is also perfect at 54%, almost at 55. Dividend growth rate, the 5-year average, is 4.1%. Interesting. Not quite as high here as VYM.
Yeah. And I had to go back through all the last 5 years and really calculate the trailing 12-month growth rates on average. And yeah, they're only at 4.1% in the dividend growth rate right now.
Interesting. But let's see one other thing. We would expect to see a higher dividend yield. So let's see what it is. SPHD's dividend yield is 3.92%.
So higher yield than Vanguard.
But lower growth.
But lower growth. Growth is 3% lower, but the yield is about 1.1% higher.
Add those together, and it looks like VYM is still coming out a little bit on top.
Add those together, and you got a peanut butter banana sandwich.
Exactly. Let's look into the expense ratio here. 0.3%. Still low compared to mutual funds. Very low compared to mutual funds.
4 times higher.
Interesting. Yeah,
that is higher.
Yes.
Is that going to destroy your return? No. But is it going to be, more than a Vanguard?
Yeah. And the question is, would you pay a higher expense ratio if there's a better fund out there with a lower expense ratio? And that's what we're here to figure out and tell you. So let's see what else we have for SPHD. They have 51 holdings. So, not nearly as many as VYM.
Yeah, so they're really concentrated into 51 stocks. So every stock you could say, on average is going to be around, 2% at least, on average.
Yeah. So, and then let's go into their top 5 holdings. They do not have any of our top 5 foundation stocks. Iron Mountain, Lumen Tech, Exxon, Altria, and Kinder Morgan. Well, now I see why they have a higher dividend yield and a lower dividend growth rate.
Yeah, that's how you get the yield. Sometimes that's how the cookie crumbles, or that's how the yield rises here with Invesco's fund. So it's very interesting. I mean, and again, on a year-to-date price return too, VYM has performed 16% so far in 2021. Invesco's ETF has performed 20.49% appreciation.
Interesting.
So you got...
It's interesting.
This is where the battle really gets fun. I mean, you get a higher yield, but you get a lower growth rate. You get a higher expense ratio, but you get a higher appreciation to your value.
Yeah, this is interesting. Like, there's no one right or wrong answer. It's like you can see how these ETFs are different and how you can mold them to your own personal investment strategy, but it's interesting to see.
But I have to do it. But wait, there's more. We've got State Street Global Advisors High Dividend Yield ETF. SPYD is the ticker. They were trading at $41.13 a few days ago. They had a forward earnings of $2.74. So what's that wonderful price to earnings ratio?
That would be 14.99. We didn't want to round it up to 15 for you here.
Yeah, why do $14.99 or $29 or $2.50, Mr. Allens?
Yeah, so they're right in the middle here of VYM, SPHD. Actually, not right in the middle. They're closer to SP. They're on the cheaper side. Payout ratio, that trailing 12-month dividend is 1.87. That EPS of 274 gives you a dividend payout ratio of 68%. Interesting.
So the highest payout ratio, above what we want to see at 60%, not alarming, not scared about the payout ratio at 68%, but just above what we'd like to see. But if they have a higher payout ratio, then they should have what?
A higher dividend. They better have a higher dividend.
Well, let's look at the growth rate for the 5-year average.
Yeah, it's 5.03. So, all right, let's think through this. Higher payout ratio, lower growth rate than VYM.
But higher growth rate than Invesco's ETF.
Yeah, so we would still be expecting to see a pretty decently higher yield here. Lanny, tell us, what is SPYD's yield?
The yield is over 4.5%, as of a few days ago, 4.55% to the yield. So yeah, way higher, by 1.7% higher than VYM, and, at least 0.6% higher than Invesco's fund.
Yeah, and this was interesting. That matches what we were expecting. This is a very interesting fund, too, seeing SPYD here.
SPYD has 78 holdings, so more holdings than Invesco's ETF. Similar top 5 holdings with Iron Mountain. They both share that as their top holding. But then they also have Valero Energy, Regency, Fifth Third, and
Seagate.
And Seagate Technologies.
Yeah, interesting. It's interesting seeing Seagate in their top 5. That's not who I was expecting to see in there.
Actually, Seagate, to make a correction, Seagate's their top holding.
Oh, yeah, I guess it is, isn't it?
Very interesting, different combination there. And from an appreciation for 2021 on how they've performed this year, they're up almost 25% year to date.
Interesting, fascinating. So
quick summary here. With Vanguard's high dividend yield ETF, VYM, you get a lower yield but a much higher growth rate.
Yes.
with the lowest expense ratio out of all of them at 0.06. State Street's was 0.07%, so not too far from that.
Yeah, and with Invesco's SPHD, you get a high yield, the lowest growth rate of the thing, but they still have a pretty solid payout ratio, and they are much more weighted towards oil and tobacco, which I think was the fascinating thing of my takeaway looking at their top 5 holdings.
And then State Street, you've got a higher yield but a higher payout ratio, but they also have a lower dividend growth rate than VYM, but yet their appreciation was much better than all three of, than the other two competitors here.
It's interesting to see how each one of them have their own little niche and their own thing. That's why you have these different investment funds. They have their own investment strategies, and it's important to look under the hood.
I will say this, SPHD is a monthly payer.
Oh, that is key.
So that's another little curveball in the mix here.
So I guess here's the question. I wanted to say this. Lanny, what is your takeaway? Like, what are you learning from this?
I think it depends on your objective.
Yeah.
My objective is creating dividend income that grows. Appreciation's great. But to me, and Bert probably, you can chime in here, appreciation to the price is always just the cherry or the espresso after you eat your, your tiramisu or your cannoli.
Yeah, I mean, I think that's a fair takeaway from this. I'm looking at this, and if I'm looking at these three head-to-head, to me, VYM most replicates my strategy. It's what I'm looking for when I'm investing. So I'm always going to lean towards VYM. That being said, I also am starting to like, and I'm interested to learn a little bit more even after this video about SPYD, because what was different between SPYD versus SPHD to me is when I looked at those top 5 holdings, it's not as oil focused. It's not what I was expecting when I saw the yield going into this. So you have technology, you have cloud storage, you have some oil in there. Of course you're going to have oil. All of these are going to. But seeing Fifth Third in there too, seeing banking in there too, it seems a little bit more diversified than SPHD.
Yeah, again, VYM, Vanguard, to me is the best dividend stock ETF for me, for my objective. I know Bert probably would echo the same. But if you're looking for a monthly payer, Invesco's SPHD. If you want that monthly income stream, not a bad play. If you're looking for overall return, you like the appreciation, maybe you don't mind the growth rate's not as great from the income standpoint, but you make up for it with the yield. I think a close second is that SPYD. It'll help complement maybe your dividend growth portfolio if you want to get more of an overall return. Because when I look at those top 5 holdings, they probably have some of the lower PE ratios, which is why you also see a lower PE ratio on the ETF itself.
Yeah, I think it's also a fantastic conclusion to this. But please, everyone, let us know in the comments, what do you think of these three? Which one's your favorite? Because a lot of you have been asking, so have you learned something new about these 3 ETFs going into this? Do you now prefer one over the other? We want to hear your thoughts and how you pick ETFs when you're investing in them.
And again, there's no right answer. It's about what fits your portfolio, your stock investment strategy. I love the conversation, not here to argue one or the other, but I'm going to say I love Vanguard, and that's why I keep buying this dividend stock ETF week after week.
Exactly, Lanny. And again, everyone, subscribe to our channel. Please give us a thumbs up if you like this. We're very pumped. We're going to be doing some more in-person videos too, blending it in with the Zoom. So get ready, everybody. The gang is back together.
The boys are back. Let's go. Boom. Wolfpack style. Again, that was the Dividend Diplomats breaking down the 3 high dividend yield ETFs, potentially ETFs and stocks for you to buy. This was the Dividend Diplomats. Over and out.